Lee Shapiro here in studio to talk about the company. You guys have a really interesting business model, Lee, and I'm glad you're here. Tell us about what LVGO does for certain types of chronic illnesses and the tech that you guys provide.
Oliver, it's great to be here. Thank you for inviting us in this morning. LVGO provides solutions to help individuals with chronic conditions to live better. And we do that using the power of the cloud and artificial intelligence, using devices that people engage with as part of their life flow every day if they have a chronic condition.
Okay.
If you're an individual with diabetes, you might be using a glucometer to test your blood sugar. Or an individual who's trying to manage their weight might be using a scale. Or someone with hypertension, 40% of individuals in the United States have hypertension, using a blood pressure cuff. We've taken those devices and embedded smart technology in them that pushes data to the cloud, where we take those signals, what we call our applied health signals engine, and analyze that and provide information that individuals can use at the moment that they're thinking about their health to improve their condition and to live better with that chronic disease.
So this is really interesting, right? Because basically you're now providing a simple, easy way for people to track what they're doing over time, how their health has changed over time, because this data is accessible to them. Now the devices themselves, is this something that you guys manufacture, the LVGO manufactures itself? Do you have partnerships with the device makers?
So most of our devices, we are the manufacturer of record. We do have some partnerships for things like our weight scale, but what we find is that more and more devices are becoming smart. Internet of Things is now going into the solutions that individuals are using in their home. We collect information from other devices as well, people's smartwatches, their activity trackers, and we analyze all of that data. In addition, we take information that individuals are willing to share with us about their health. So if we're getting information from their physician's electronic health record, we use that as part of our AI engine that aggregates, interprets, analyzes, and applies that data, and then we iterate through that process, understanding what those individuals might be doing in terms of their activities and how they're changing, and we provide them with health nudges at the time they're engaged with their health so that they can use that to provide, I'd say, corrective action to allow them to live healthier lives.
Now, when it comes down, I want to get to the security part, obviously, of the cloud and the data, because when you say information about health goes up into the cloud, obviously that begs the question, what are the security, the protective measures that are built around that? Because we know we just saw most recently a Capital One, breakthrough and a hacker there. I mean, everybody's concerned about this data. How do you make sure it stays where it needs to be?
We're really fortunate. We have a fantastic technology team that has been involved with both healthcare data and financial data for many years. And what we've built into our platform is the level of security at scale that makes sure that that information, personal health information, is a protected asset. It's governed by law, and we make sure that we have gone beyond some of the standards that are required by law to make sure that our members' information is always secure, both at rest and in transit.
Now, let's talk about the business model, because you're the CFO. Where does the revenue come from? Is it the purchase of the device, and then that customer is that one-time purchase? I imagine when you say nudging towards other possible things that these customers might want to use to either track their health or make adjustments, is there incremental revenue in the business model there as well?
So we have a per participant per month model. So think of it as a SaaS revenue model that we're only paid when our members are using our solutions. What's great about that is our clients, and we have over 20% of the Fortune 500, many of the leading pharmacy benefit managers and health plans in the country who are clients of ours, they're paying for our solution on that per participant per month basis in order to assure that the member has a better experience around their health.
Can they get insurance for that?
And typically the member is paying nothing. So if
this is covered by insurers.
So if it's covered by their employer, it might be covered by their pharmacy benefit manager or by their health plan. But as an individual who's using our platform, you are paying nothing for that solution. You get the device, you get the supplies. So for example, if you're an individual with diabetes, your test strips come to you free. And that's a big difference from the way the market works today.
Right.
Typically, individuals are paying an out-of-pocket copay. They're paying for their lancing device and the lancets that they need to prick their finger. And what we're finding is that we know when individuals are testing, we want them to test. So rather than having them come out of pocket to pay for test strips, we're sending them as they need them.
We know right now there's a huge debate going on about who is most responsible for elevated healthcare costs, and we don't really know what legislation comes on the back of that. Right now, in terms of the conversations with the PBMs in the healthcare space, are they ready and willing? Do they want Livongo's products as part of their offerings? Is it something that you see as continuing to keep that coverage? Where's the incentive from the PBM to have a customer come in and say, you want to use this, you want to use Livongo?
We have great data that demonstrates the return on investment that we provide to our clients. Typical savings in the healthcare costs of our members who are using the solution is just under $2,000 per member per year. And that's savings that's accruing to those who have the risk for the cost of care. So the member loves the experience. Our Net Promoter Score is over 60, which in healthcare is really unique. We get great engagement from our members. They're adopting the solutions rapidly because it fits within their own life flow. And what we're finding is that our clients are seeing a great return on investment that's not only in the first year of using our solution, but that grows over time because as individuals have fewer health complications associated with their chronic conditions, they have lower emergency room visits, fewer doctor's visits for complications, fewer downstream complications that come from chronic disease. So that proven return on investment is what really distinguishes Livongo.
Now, the fact that your customer now no longer has to go and pay for these things every time, pay it out of pocket, pay that higher premium, I would imagine that someone there, because that margin now has shrunk basically, I imagine someone in this chain is getting pinched. So who's getting pinched by the advantage that the Livongo's products provide?
It's a virtuous model, and the reason why I say that is because everybody wins. First and foremost, our member wins. That's the individual who's using the solution. They feel healthier, they're not visiting the doctor as much. Doctors also love our solution. So when you say who's pinched, well, maybe we're reducing some routine doctor's visits, but if we
creates time for them elsewhere, creates
that's right, because what we're doing is we're seeing those individuals who have complications. If they're either trending towards a very low blood sugar or very high blood sugar, both of which can be very dangerous for the member, we can now intervene and get them to see the doctor sooner to address that before it becomes expensive complications.
Interesting.
More and more the healthcare system is moving towards pay for value as opposed to, or what we say, pay for quality as opposed to pay for quantity.
Right.
And I think there's great alignment amongst health plans, providers, as well as patients to see that improve.
Now, this is one example of how the problem with the healthcare cost, the bloated healthcare cost, can be solved. I think what you're suggesting here is that Livongo's products, in this sense, are able to kind of thread this needle, basically, to help address bloated costs without really having to make some drastic charge against some party within the system as being at blame.
Oliver, you're spot on. And what we're doing is we're finding that we can improve quality, reduce cost, but more importantly, improve our experience as individuals. I like to say, and for the audience who's watching, how many of them really want to be patients today? No one wants to be a patient.
Sure.
Everybody wants to be healthy. And so what we're doing is we're allowing individuals to put their chronic condition in the background and to live their life. Livongo means living on the go. And what we all want to do is take care of those essential daily tasks, enjoy the time with our family, but not to always be worried about that chronic condition. And so we're putting that in the background.
At your debut, the value at the end of the trading session was about $3.4 billion. As we see on the chart, you guys have continued to basically climb for the most part. So you're a small to mid-cap company. What are your goals? What are the growth markets for you? Is it just scale on the existing products? Is it gaining more insurers to then provide scale that through that way? Where's the clearest growth in your mind?
Oliver, we're in a target-rich environment, and unfortunately, chronic disease is an epidemic. There are 147 million individuals in the United States with a chronic condition, 40% of whom have 2 or more chronic conditions. Individuals with diabetes today comprise, just in the US, over 32 million individuals. Today, Livongo is serving just under 200,000 of those individuals. So we have a long way to go in terms of growing within our diabetes solution. But we also have hypertension, weight management, behavioral health on our platform. So we see our opportunities for growth organically by improving the level of usage at our clients for our diabetes solution, which is where we started, layering on additional products for our members. So improving same-store sales or product density. But we also have a market where we continue to grow. Unfortunately, 500,000 individuals are diagnosed each year with diabetes in the US. And in the next few years, there'll be more individuals in China and India with diabetes than there are people in the United States. So we haven't started to even think about what the international expansion could be.
In 2017, your revenue was about 31 million. In 2018, you more than doubled that. At the same time, you're spending a good bit. Free cash flow decreased in that period. Tell me about what it's going to take to do those things you discussed. Should we expect cash flow to continue to drop at the expense of scale? At what point do you sort of see that leveling off? Or at what point, because I imagine you're going to have to get more salespeople, you're going to have to get more programmers and software engineers as well.
Well, our revenue, as you noted, is growing rapidly, and certainly year over year, 2017 to 2018, it grew by 122%. We believe that because this is such a massive market opportunity, that we will continue to invest, and we're not going to take our foot off the gas pedal in doing that. But we also believe that we can invest more gross dollars, but over time reduce the spend on sales and marketing and R&D as a percentage of revenue while still spending more.
Okay. Do you have an estimate for what that might be, say, in a year?
So we're not able to talk about our future models. We're in a little bit of a quiet period, but some of the analysts have done a great job in terms of looking at what that future looks like. Last
point here, speaking of the quiet period, from what I see, it looks like about 60% of the shares are currently held by executives. Beyond Meat just kind of shook up the market yesterday because they did a secondary offering. I mean, the IPO that you guys did at the time, is that enough capital for some runway in which you're not going to have to bring new shares to the market?
So great question. We were fortunate to raise a significant amount, just under $400 million as part of our initial public offering. We believe that's more than enough capital to get us to profitability.
All right, there we go. Lee Shapiro, really great conversation.
Oliver, thank you. Great being here with you today.
Appreciate it. Lee Shapiro is the CFO at Livongo. LVGO is the ticker.